Welcome to the show. I'm Andy Hagans, and today we're taking an MLP crash course with Stacey Morris, head of energy research at VettaFi. Stacey, welcome back to the show.
Andy, thanks so much for having me.
So, in the last episode, we talked about the global energy trilemma, lots of big picture ideas. I love talking about big picture ideas, but I also love investing. I love talking about products. I love ETFs. I love MLPs, all of these different products, some of which have great tax advantages. I think they are MLPs in particular are a product segment that advisors need to know about, high net worth investors need to know about. They have huge potential for income and so forth. But where I want to start is because I think a lot of advisors and investors are not too familiar with MLPs. What is an MLP? Could you give us a brief crash course?
Yeah, sure. So MLP stands for Master Limited Partnership. And a lot of times people at their kind of simplest form will think of MLPs as pipelines with advantage tax treatment. And that's sort of true, definitely oversimplified, but MLPs are essentially pass-through entities. They don't pay taxes at the company level. And so that provides some special tax advantages for an investors. If you directly invest in an individual MLP, you'll receive a Schedule K1 for doing your taxes. Some people don't mind them, some people do not like them. But essentially, the K1 details your portion of the MLP's earnings or income, deductions, gains, loss, credits, etc. And you use that to file your taxes. But what most people like about the MLP space is that typically a significant portion of your dividend or your distribution is considered a tax deferred return of capital. So what that means is you get a dividend, and then if it's, for example, 100% return of capital, you don't pay taxes on that until you sell out your position. So that's really what people have been attracted to about this space because there's no federal income tax to pay. These companies have typically paid very generous dividends, and then those dividends also come with special tax advantages. And then in terms of the structure, MLPs are primarily focused on handling natural resources. So pipelines have generally been kind of the bread and butter of this space.
Right.
But MLPs are also involved in things like processing natural gas or natural gas liquids. People may not be familiar with natural gas liquids, but it essentially comes out of a well with oil and gas, and it ends up being things like propane or butane that you've actually probably used in your daily life. Companies are also involved in storing energy, loading ships to export energy around the world, and really providing that kind of shipping and handling part of the energy value chain. And that's really what we focus on within the MLP space, are those energy infrastructure MLPs.
Totally. I have to say, Stacey, that was the best, most concise, but also useful summary of MLPs that I've ever heard. So congrats, because I think that kind of summed up not only what they are, why they're popular and how they might fit into a portfolio, the type of investor who might want to invest in them. I mean, the audience for this show, it's a spinoff of the Alternative Investment Podcast, our long running show that's, our audience is high net worth investors and family offices. So obviously a lot of accredited investors are looking for tax advantaged investment types. I think in almost like spiritually, they're kind of similar to REITs in the sense that they don't get double taxed because of that, unique corporate structure. But because of that return of capital aspect, it's income that's not being taxed at the federal level, almost like a muni bond. Obviously, a very different risk reward profile than a municipal bond. But on the topic of bonds, bond yields are obviously a lot higher now. They're a much more attractive asset class. Has the fact that you can get much more substantial income from bond issues, has that hurt MLPs? Are MLP yields moving at all, along with yields in some of these other asset classes?
Well, here, what's nice about MLPs is that their yield is so much higher than even what you can still get from corporate bonds now, that I think it's less of an issue for MLPs than maybe it has been for utilities and REITs, which now
Okay.
you can work from bonds in those categories. So it really hasn't been a headwind for the MLP space. I mean, performance for MLPs this year has been great. We can talk about that. Um,
Well, let's
but
talk about that. Actually,
yeah,
let's talk about that. How has performance for MLPs been this year?
Yeah, so if you look, year to date through yesterday, MLPs are up about 21% on a total return basis.
Wow.
Um, Keep in mind, as of Tuesday, the Alerian MLP Infrastructure Index, which it was one of our indexes, it's the underlying index for the Alerian MLP ETF, ticker AMLP. That particular index was yielding 7.5% as of Tuesday, or September 19th, I should say, in case this airs a little bit later. But the yields that we see in this space are much more generous. And importantly, they don't fluctuate a lot with what you see in interest rate markets. So, MLPs were yielding around 7 or 8%, a year or two ago before we saw interest rates go up, and they still have those types of attractive yields today. So, if you look at a 10-year average for corporate bonds, their yield is below 3%. For MLPs, it's at 7.8%. So I think from a portfolio construction standpoint, what can be nice about MLPs is that that yield and that income is there, and it's not dependent on what you're seeing from an interest rate perspective. And so I think that can be kind of complementary to some of the other income assets that people probably own.
Okay, so I'm thinking we have a 7.5% yield, fairly decoupled from what's going on with interest rates, and a large part of that yield is tax advantaged or not taxed at the federal level. It's not double taxed because of the MLP structure, kind of like with REITs are not double taxed. I'm not worried about a K1. I think a lot of the audience in our show, we kind of, it's a kind of a running joke. At some point, when you invest in alternatives, you end up with like so many K1s, you stop caring. I think the number, it's between 5 and 10, right? When you're getting like 4 K1s a year, you're considering that fifth investment. You're like, oh no, do I really want another K1? But once you're getting 10, you just kind of stop caring. You really only care about the last one, right? Because you get the first 10 or whatever. And then you got to track, your accountant's bugging you. You got to track down that anyway. But what's the catch? Because I'm hearing MLP, I mean, 7.5% yield, tax advantage, decoupled from interest rates. Sounds like the greatest thing since sliced bread, but there's no such thing as a free lunch, right? So what's the catch? What's the risk?
Yeah, there's no such thing as a free lunch for sure. And one important point to keep in mind on the tax perspective is it's tax deferred. That return of capital portion, if you sell out of your position, you're eventually going to have to pay taxes on that. Now, if you are an investor in an MLP and you've received a bunch of return of capital distributions and then you pass away, that's a little different story because your basis gets stepped up for your heirs. So that way you kind of can avoid the taxes, but I want to make clear that it's more about tax deferral than overall tax avoidance. So that's
Understood.
kind of one catch. But then the other thing to keep in mind is that these companies are predominantly making money related to oil and gas. Even though they're providing services for fees, we have seen volatility over last several years when you see weakness in oil markets. So March 2020 is a good example of this, where we saw the whole energy space really get decimated, and MLPs got caught up in that as well, even though they are more defensive, and a lot of these companies were able to maintain their financial guidance through the whole year, despite all the volatility that we saw in energy markets. So that's the only other kind of point to keep in mind, is that space can trade in line with what we see with energy. It can be volatile. And there's other risks as well with like any typical investment. There's regulatory risks, things like that to keep in mind that are going to be fairly standard. But those I think are maybe the items that keep this from being a free lunch, if you will.
Understood. Now, you mentioned that MLPs often involved with oil and gas. Are most MLPs pipelines for natural gas, or I guess how many of them are oil versus gas, or sometimes is there MLPs that are involved with both?
Certainly. So there's large MLPs that are involved in oil, natural gas liquids. They have their hands on a lot of pots, if you will. Yep. And then there are, for example, gathering and processing MLPs. Those tend to be more focused on gathering natural gas from wells and bringing it to processing facilities and then processing it into essentially natural gas that you can actually use. So taking out impurities, that sort of thing. They can also be, involved in gathering oil as well. And then you've also got MLPs that are focused on things like, for example, liquefaction. Now, there's only one liquefaction MLP, Cheniere Energy Partners, but they're taking natural gas and liquefying it for export. So there are kind of different types of MLPs and different focuses. If you look at this space, it's a mix between pipeline transportation of oil or oil-related products, so gasoline, diesel, essentially refined products, and then those that are predominantly focused on natural gas. There is a bit of a mix. In the MLP space, it tends to be more focused on that petroleum side and the gathering and processing side. And then there are MLPs outside of this that we don't really focus on, but that are structured as MLPs because they're still doing things with natural resources. So there are MLPs outside of this, but in general, people tend to more often focus on those energy infrastructure MLPs.
Right, right. The kind of the big player in the space, obviously oil, gas, energy, and as far as debt, because we were talking about REITs briefly. I brought up REITs, a little bit analogous, not a perfect analog, but with REITs, I'm always looking at the balance sheet and what's the debt situation. And to me, that's kind of a very good way to sort through different REITs and to look for, whatever quality REITs you might want to hold in your portfolio. How much of an issue is debt in the MLP space? Are these master limited partnerships, do they generally have strong balance sheets, or is there more variation there in terms of their debt financing?
Yeah, so over time, MLPs have gotten a lot better from a leverage perspective. It used to not be uncommon to see leverage over 5 times in this space. A lot of the bigger names in particular are targeting around 3, maybe 3.5 times. Some are still up probably around 4, but generally speaking, we've seen leverage in this space come down over time. And so balance sheets are a lot stronger. And importantly, these companies are spending a lot less money than they used to. So if you think about kind of what we've seen in the US energy landscape, US oil production just went crazy from about 2010 up until the pandemic. And so these companies are spending billions and billions of dollars to facilitate that growth. We needed a lot of pipelines. We needed a lot of processing facilities, new export facilities. So they were spending a ton of money kind of leading up to the pandemic. Capital spending was peaking in 2018 or 2019 anyways. And then you've seen, since then, more moderate growth in US oil and natural gas production. And these companies are not having to spend as much as they used to. So they're generating a lot of free cash flow. And that's also helped with the debt reduction and improving balance sheets. First step when you start getting excess cash is kind of fixing your balance sheet, and then you can look at other options. And we're in that phase now where you have a number of MLPs with buyback programs, a number of MLPs that have been focused on growing their dividends. And so we're seeing kind of those tailwinds from free cash flow generation. Now that a lot of these companies are generating free cash flow and they've already got their balance sheet in pretty good shape.
So there was already this trend towards lower debt, stronger balance sheets. Then we have the pandemic, but there was also a trend of lower capex, kind of going into 2020 and now to 2023. Now we have oil prices back up, with some commodity prices back up. So it's kind of like let the good times roll, right? And to your point, excess free cash flow, it's always a good problem to have when you end up with more free cash flow than you were projecting.
Right. And I think from an MLP perspective, these companies generally are earning fees for service. So it's not like their bottom line goes up a lot when oil goes up. I mean, I think it helps more from a sentiment perspective.
Okay.
It may, to some extent, encourage a little more production growth in the US, although, producers have been extremely disciplined in the US in terms of not growing production that much, which I would argue is actually good for MLPs. It seems like these companies are volume driven. More volume should be a good thing. But if you look over the years and look at MLP performance, when production was growing 2 million barrels per day in the US in kind of 2018, 2019, the equities weren't really doing much. So that lower production growth in the US, not weighing on oil prices by growing too much, has actually been better for energy sentiment and better for the performance that we've seen out of the space.
Understood. Okay, that's interesting. Now, we've talked quite a bit about oil. Also, in our last episode, talked about oil, and I talk about oil a ton on the show. Not as much natural gas, but I know MLPs, obviously natural gas, huge in this space. What's what are the trends in natural gas that you see playing out right now, possibly over the next few years that you think investors maybe should be aware of?
Well, I think the biggest story from a US natural gas perspective has been the growing exports of liquefied natural gas. So, the US in the first half of this year was the world's largest LNG exporter. And we're on track with projects under construction to essentially grow our capacity by about 75%. So LNG has been just kind of this huge story in the energy space. And I think it's one that advisors and investors tend to be really interested in because it is a really strong growth story. So from a US perspective, LNG has been positive in that we can grow our production more because we're not just stuck with the demand here in the US or what we can pipe to
Right.
Mexico and Canada. So it opens, a lot of doors. Clearly, from a global perspective, the US being a large LNG supplier is a positive. Thinking about what happened last year in Russia's invasion of Ukraine and how quickly the world found itself trying to find natural gas from somewhere else.
Mhm.
That's certainly an important element of this too. So I think from a natural gas perspective in the US, it's a really good story of we have a lot of reserves, a lot of resources. It's relatively easy to extract, and now we're in a position of being able to export more and more of that overseas. From a price perspective, natural gas prices were much stronger last year. Then we had a warm winter, and prices have been pretty lackluster for all of this year. So natural gas remains very cheap in the U.S. today. I think that price story probably starts to get better as we see more LNG export facilities come online in 2024 and even into 2025 to kind of help tighten that market.
Will
But
that will that
overall,
will that kind of export more export oriented market, will that make the I'm trying to think, will that make the price more volatile, or will it make it more behave more like oil prices in the sense that if it's more fungible, if it's more transportable, to other places? I mean, that's obviously good for the United States, to your point, something that we can export. But how does that change the volatility in the long run, do you think?
yeah, so I don't think in general, assuming, there's ample supplies in the US, which there are, I don't think it's going to cause, for example, US prices to trade, near where we see natural gas prices in the UK or Europe
Okay.
or Asia. You still have, that kind of transportation element, and a lot of these contracts are kind of based on a fee and derived off of Henry Hub, which is the US benchmark. So I do think, to the extent we see more natural gas exports and that tightens supply demand fundamentals in the US, that can lead to a higher gas price here. But I don't think we're on a trajectory to see US natural gas prices reach those kind of levels that we see in Europe and Asia, which have always kind of historically been more expensive.
And are they more expensive? I mean, is that because of taxes, or is just less efficient, supply chain, transportation, and all that?
Yeah, I mean, from an Asia perspective, it's an element of kind of there being a lot of growing demand there and not a lot of nearby supply. I
Okay.
think that's kind of been the rub. On the European side, it's somewhat similar in that you have declining natural gas production in places like the North Sea, for example, and that
Right.
probably being a part of it. Obviously, the Russia element is kind of a separate story too. But just in general, I think the US cost advantage is just that we have so much natural gas and it's really easy to get out of the ground. So, and we have all this infrastructure to move it around the country. So part of it is Asia and Europe are more expensive, but it's also a story of US is really cheap because we have just all these resources and advantages that make it more cost effective to produce here.
We are a very blessed country. There's benefits to having a country with a giant landmass with all sorts of geological, geographic elements to it. Well, that was really enlightening, sharing some of those trends in the natural gas space. How about broadening it out to the MLP space, back to this investment wrapper? I'm a big fan of MLPs. Obviously, they've had a very good year, which is great. Do you see this space, the MLP, segment growing from here? Do you think it's going to grow in sort of in the minds of investors in terms of is it going to be a major investment vehicle type ever, do you think, or is it always going to be more of that sort of niche product type that some advisors and investors use and others barely know that it exists?
Yeah, I mean, I think unfortunately that's been the challenge with the MLP space is that there is a learning curve and there are people who don't understand it or just have kind of glossed over it because there are some nuances and some tax considerations and things like that. So, in a perfect world, I would love for MLPs to be like REITs where everybody probably owns them and that maybe they know it or maybe they don't, but they get those benefits.
Mhm.
But it is, a smaller niche space. And so I think a big part of what I focus on in my role is just educating people about the space and trying to bring more awareness to the tax advantages, how it works. And surely, people should talk to their tax advisor if they have questions about the MLP space. They shouldn't just go off what we talked about here. But, I
Obviously.
hope over time that more and more people start to look at this space because I do think there's really attractive advantages here. The income story that we talked about, the free cash flow tailwinds that we talked about, and people may just not be aware of it. And unfortunately, we've seen a kind of niche space get smaller over time. We've
Mhm.
seen companies be consolidated, or their corporation parents have bought MLPs in for various reasons, and so um, I think that's in some ways made it more difficult because it has become smaller in the sense that there are fewer companies playing in this realm. But I think there's a lot to like about it. And I think also the fact that it is maybe underappreciated or under the radar is actually maybe a good thing, right? That probably means there's some opportunity there. You're not going to find MLPs in the S&P 500. So there's, diversification kind of right there. So I think over time, I'm hopeful that more people will start to take a look at this space, especially as we've seen, good returns now for a couple years running, and hopefully that starts to bring some more interest back.
Yeah, I think it will. I think it already has, to be honest. And Stacey, we're almost out of time, but your point, this education gap on the space. If I'm an advisor or an investor or family office, and I'm thinking, you know what, I do like what they're talking about. I want to research MLPs more, maybe do some more research to find out, if I should include some in my portfolio, and if so, which MLPs in terms of tools, resources, where would an advisor, where would an investor start in terms of researching this sector and also just the different issues?
Yeah. So to your point that you made, I think earlier, we have a lot of research on our ETF Trends website as part of VettaFi. That's where all my research lives. And if you go on to etftrends.com and just toggle over to the energy infrastructure channel, there's all of our research, but there's also a number of resources on the right-hand side of the page. You can find primers there, things that are going to be more user friendly to people who are new to this space. And so I think, honestly, our website is a great place to start because we do try to provide a lot of resources. It's freely available. And, we're targeting an investor audience. So I think that's probably the best place to start. There are some other resources out there. The Energy Infrastructure Council has a website, eic.energy. They have some resources, basic tax principles, things like that may also be helpful for investors. But I would start at etftrends.com and then going over to the energy infrastructure channel.
And how about advisors? If I'm a high net worth individual working with an advisor, is it your experience that most advisors are already well versed in MLPs, or are advisors really needing to close the education gap on their end? Are there any resources specifically for financial advisors?
Well, I think from a financial advisor perspective, it's mixed. I think there are financial advisors that really understand this space well. They own MLPs in a lot of different client portfolios and they really get this space. And then there's some that I think just haven't had exposure to it or, haven't taken the time to delve into it. So, if you're an advisor and you have resources through your essentially your like if you're at Raymond James or Wells Fargo or one of
Sure.
those kind of bigger wirehouses and that's your affiliation, I mean, there's a lot of resources, I think, in-house there. You have midstream and MLP analysts, and you're probably able to access their research. So that might be, another avenue for advisors who are affiliated with those larger firms. ETF Trends also, we're doing constantly webcasts on this space at a pretty regular pace.
Mhm.
And we're really targeting that advisor audience. So those can be a great way to learn more about the space as well.
And get
But
some CE credit, right? For some of these
that's
webinars,
right.
get some CE credit.
That's right. You spend an hour with me and get some CE credit and, get up to speed on the MLP and midstream space. So there's a lot of resources out there, I think, for advisors who want to learn more. And, hopefully they can find those either kind of in-house or, even through our website.
Great. Well, there's obviously a lot to learn. We couldn't cover everything MLPs, in a 30-minute podcast episode, but Stacey, you really gave us a great crash course. I think the appeal of this product type, some of the trends going on, and with natural gas and oil. So I can't thank you enough for sharing your knowledge with us. Where can we find you or follow your writing? That's on the one more time. That's on etftrends.com. And then which link do I click to get to the energy space?
Yeah, so it's etftrends.com, and then there should be a drop down that says channels. And if you click on energy infrastructure, you can find all my research there. There should also maybe be a pop-up to sign up for our research. And then I'm also on LinkedIn. So if you want to find me on LinkedIn and ask to be subscribed to our research, you can do it that way too. Happy to try and help connect people with the resources that we have.
Awesome. And I'll be sure to link to those links in our show notes as well so everyone can navigate to them
Perfect.
easily. Stacey, thanks again for joining the show today.
Yeah, thanks for having me, Andy. It was fun.